Hi, this is Zach Meir with the New Year's Eve edition of the Bulletin Board Heroes here at Vox Markets. There wasn't going to be a Bulletin Board Heroes, but seems to be quite a lot going on, and apologies for the lateness given the early close on the market. But anyway, here are the charts. Starting off with Beximco, and here we've had a nice two-day breakout through 107, which was effectively the initial high of the year, so finishing the year on a good note. Above 107, looking to the top of that rising trend channel from January or the end of December, as high as £1.65 perhaps by the end of next month. Good to see one or two stocks coming back from not quite the dead, but you know what I'm saying. Echo is the next one here. We've got the shares finally breaking a line of resistance from April. That was around, the 0.5p level, maybe 0.47, something like that. And above that, looking for the 50-day moving average initially at 0.57, which is not a great target, but the 200-day line very much in prospect, maybe by the end of next month. A bit of bullish divergence kicking in there as well as the resistance line breaks, so that's healthy for this situation. On to Hemogenics, which I know is a favorite of quite a few people. Hasn't quite delivered yet, but who knows, 2022 might be the year that it does. Here you can see that we've had that bear trap basically below 1.6 pence level, above 1.6, and especially while we hold the 50-day moving average at 1.7. You can see the shares go back towards the top of that August broadening triangle, and the 200-day moving average at 2.4, 2.5 pence. Obviously, we do have a rather keen seller who keeps appearing whenever there's a spike over 2 pence, but let's see if the shares can at least get up there before they may get slapped down again. On to Canabo, and here you can see that we've had a nice bounce off the floor of this falling trend channel from back at the end of February. That was at 10 pence, and it'd be a nice look for the chart if we can close above the 50-day moving average at 13.5. Above that, looking for the top of that channel, the 2021 channel, and just above the 200-day moving average at 20 pence. Another situation which is backed by bullish divergence. So we had lower lows for the end of December, but a higher RSI trend line, and that should give some the confidence that the shares can rehabilitate themselves early next year, maybe 20 pence by the end of January. On to Cadence, which came up with the big announcement maybe that people were waiting for earlier in the week. Here we gapped up through the sort of triangle that we were in and broke that resistance line there from June, above the 200-day moving average at 24 pence, looking for the top of the rising trend channel from April 2020, as high as 38 pence, maybe by the end of next month. So looking quite sprightly there, with the second near-term gap to the upside, unfilled gap to the upside on Cadence. That tends to be a decent momentum signal. On to one of the tipped stocks of for next year, Oracle Power, one of the top 20, or just in the top 20, and here it looks as though we're breaking that line of resistance again. That one from February around 0.45, already up, well, had a bear trap rebound from below the 50-day line at 0.4, and certainly above 0.4, looking for 0.6 or maybe even 0.8 over the next 1 to 2 months, maybe as soon as the end of January. But nice divergence line there in the RSI window as well, so that does suggest that the shares may gather momentum over the near term. On to a stock which didn't have the best start to the market, PYX Resources, but we have a W-shaped reversal here, broken that neckline there at, let's call it 64 pence, and above 64 pence looking for at least the 50-day moving average at 82 pence over the course of January for those shares. Reabald is one of the better risers of the day, and here we've broken out of that rather extended one-year triangle, breaking the resistance line there from April around 0.11 and above 0.11, looking for the low 20s, maybe up to 25, 0.25 rather, for the stock over the next month or so. But a pretty decent rebound, and also the rebound accompanied by a very oversold state. The last times the shares were that oversold, there have been reasonable rebounds from those levels, apart from, I suppose, July, but you can't win them all. On to Savannah, and here we're back in business for the bulls at the moment, gapping higher. A possibility here that we've got a rising trend channel, which the shares may eventually acknowledge. Top of the channel there, heading towards 32 pence. And if that channel is correct, I suppose we would hope for the shares not to go back below 20 pence ahead of a move up to 32 over the next 4 to 6 weeks. Really pleased to see Seed Innovations rebound. I think I interviewed Ed a few weeks ago when the shares were, I think, 5p, 6p, something like that, maybe 5.5, something like that. But we broke that line of resistance from September at 6 pence, and we were looking for the shares to hit the top of that broadening triangle from April as high as 9.5 pence, which now looks as though it could be achieved quite easily. If you're a fan of the shares and hoping for more, then I suppose the next target here above 9.5 would be up to 12, which would then take the shares above the present NAV, which is around 10.8 pence from memory. Finishing off with Extract Resources, we're still looking for those 2 million tons of contained copper. Here you can see the shares trying to break that line of resistance again from back in March. A bit sort of fuzzy in terms of exactly where it is, but I suppose anything above 5.6p now would break that line. And if you're fussy, though, you wait for a weekly close or end of day close above 6 pence, just to prove that this is finally the breakout and the breakthrough that the shares have been trying to deliver since October. Above 6 pence, looking for 10 pence over the following 1 to 2 months on Extract. That's it for me today. Have a happy new year, festive occasion, hopefully tonight.